detached starts of housing in Australia were up around 10% in the first half. That's a great news story, and particularly permitting in December was strong, which we think is a stimulus-related activity. The uncertainty for us really comes from the fact that multi-residential or high-rise apartment construction in Australia was down 14% in the half, and it's particularly down in markets that are important to Boral, like New South Wales. So we're not seeing any kind of stimulus or any kind of actions at the moment that will turn around the multi-residential impact, particularly with low immigration for the foreseeable future, with a stock of product that still needs to be sold, and with this more recent phenomenon we're seeing where a lot of people are moving out of capital cities and into regions or city fringes. So I suspect for the foreseeable future, multi-residential will be challenged, albeit I'd love to see continued detached growth as we saw in the first half.
One other thing that has been not just peculiar to Australia but around the world, and is largely because of things like shipping and logistic costs and various other costs that unfortunately have meant that input prices have been going up. To what degree has that been crunching your margins, and to what degree have you been able to pass any higher input costs or higher commodity costs onto your customers?
I think that's a great question because it goes to how we think about the business. So what we try to do is when we have inflationary impacts on our costs, we look to deliver opportunities for cost reductions to offset those inflations. So we're not looking for price rises to give us a free kick on that. We need to make sure our business is much more efficient. And I'm pleased to say both in North America and in Australia, we're able to offset inflation through our own cost initiatives, and in particular in Australia, deliver a little bit more to the bottom line. So if we can get pricing, particularly in uncertain market environments, that's a bonus for us, but we're not relying on pricing. We want a lot of self-help here.
Just finally, Zlatko, in terms of, you were discussing that housing market, I suppose, with Mandy, but in terms of the big broad-based infrastructure that we are likely to see, the Biden administration is flagging considerable infrastructure spend. Here in Australia, the Morrison government also looking to invest quite heavily over the next couple of years. So how's your idea or your outlook when it does come to the pipeline, and how you can stand to benefit perhaps in your concrete businesses and the like?
Well, maybe if I start with Australia, Will. So we like the fact there is a really strong pipeline of infrastructure opportunities in Australia. What we called out in the first half was that those opportunities aren't coming to market as quickly as we expected. And then in terms of what the impact is on Boral, we saw a number of projects that either completed in the last financial year and the first quarter of the current year before, so there's a bit of a timing impact before new projects hit us towards the back end of this year, FY22. So we like the pipeline, but there's probably a bit of a temporary impact in the current financial year. The US is in a bit of a different state. So we're very supportive of what's being mooted around infrastructure stimulus in the US. It's a very, very supportive outcome for our fly ash business. But we also need to recognise that there's a shortfall of supply today. So that will build on the demand, which we think is a great outcome. Our challenge is then to make sure that we've got the alternate supply options to really bridge that gap in supply that's available today.